G'day folks, welcome back to another update, and today we're looking at Tesla stock, and it's still very bearish, but there's a small retrace expected with a divergence. I'm going to include some back testing as well to show you some different results compared to some stop loss strategies. In terms of the outlook for stock performance, Tesla stock has declined over 50% over the past 3 months, reducing its market capitalization from 1.5 trillion to 845 billion. Valuation concerns. Despite the drop, Tesla's stock remains expensive, trading at 89 times this year's projected earnings, significantly higher than other tech giants and automakers. In terms of insider activity, recent data indicates there have been no significant insider purchases of sales of Tesla stock. Analyst perspectives. Analysts are divided. Some express concerns over declining vehicle sales and increased competition, while others remain optimistic about Tesla's future prospects in AI and robotics. So we always start the long-term trends. You can see here on the monthly, the price is actually broken into that moving average range, giving us a somewhat neutral signal. Likewise, the CCI 150 is also in that moving average range. So avoid going long or short if you're trading on the weekly basis. We always trade in the direction of the higher time frame. So at the moment, the monthly is neutral. And these moving averages, by the way, are in the description below if you want to reference that video. On the weekly chart, you can see there it's already broken below the moving average of the price chart and also below on the CCI 150. And normally we expect the CCI to track in line with the price. As you can see there, it's been moving very similar to the price, which is what we normally expect. On the daily, so bearish on the weekly, on the daily, it's actually hit this resistance up here at 488.50. And ever since around about the end of last year, it broke through that moving average range on the daily of the moving average of the price chart, and it's been declining since. So what we do is then we look at it on the CCI as well, and it's been tracking below the moving average range. It's made a bit of a retrace so far, but nothing to get excited about. I wouldn't be buying it yet. I'd like to see this turn up, like it did back here, for example. You want to see some upward movement through the moving averages on both the CCI and the price to be even considering buying it. Now you'll notice here I've got this support level at 182.20. It may possibly, this would probably retrace in the short term. We might see it further decline towards this level, but we'll see if it drops much further than that. We're going to see obviously a lot more bearish outlook. But at the moment, a small retrace. But again, I wouldn't be going long or buying it until we saw it break above these moving averages. Now, if we go to the intraday chart, we always look at the micro level as well, even if you're trading on the daily, to see if there's any small movement. So here, for example, the CCI has been tracking in line. This is the hourly chart. It's been tracking in line with the price chart. And up until here, we see higher lows on the CCI versus lower lows on the price, and that's actually already broken up and made a small advance to the upside. You'll notice the CCI is also bullish as well, or slightly bullish, I would say, not too strongly bullish. Now, in terms of a retrace, we take back a Fibonacci level to the closest high before that divergence started. And you can see there it's actually may have already touched that area at 20. It's what we look for is a retrace to the 38% level. And you can see there with those few hours there, it's already touched that 23%, and then it's bounced back further to the downside. Now this could still rise. I haven't ruled it out yet, but at the moment, again, I would avoid going long or short until we see the again, as I said, I'm going long only until we see the moving average has been broken on both the price and the CCI. So what we look at here, we've got some back testing here. The top, this is a profitability chart for the stop loss strategy, and this is the profitability chart for the average down approach. And where we enter the trades, and again, this is on the daily, so we take the weekly on this point here. So if you're trading on the daily, we look at the weekly chart, and we take short trades if you're trading short from this period when it broke below that point there. So that would have been from entering from there. Now here I've started putting in a short position based when the price broke below the moving average. And you can see there just again, ideally you want to wait for the weekly to break below as well to take short trades. But again, I've just taken it back here to demonstrate how this average down approach works. So for each of these little blocks, that shows the number of shares bought, and we're buying $1,000 worth for each entry. So up here, each one of these would have been $1,000 entered there, and here it stopped it out. And so you've lost about $120 odd on that little trade there. This one stayed in the trade because you're averaging down. Now, at this point, you would have closed it out. You would have bought the first $1,000 in those two blocks there. It went against you, and then you added another, we double the shares, so you buy $2,000 worth, and that level would have been $2,000 worth of shares, and there it finally closed out when the price dropped and hit the 3% level. And up until that point, it generated $158. Again, we're talking about small trades, like $1,000 worth of initial trades, so nothing too big, but obviously you have to multiply that by your bank account or your trading account. Up until currently, you can see there we're currently still open at the moment. If you were trading short on this, the stop loss approach has generated $240, and the average down approach has generated $743. So here I'll just demonstrate, had you been going long during this period from about June, that was about, August 2024, you would have taken going back to June 2024 when the price and the CCI broke above the moving average. From that point there, I've marked with this back test here with the stop loss approach and the average down approach, and you would have closed it out where the CCI broke into that moving average range in those 3 occasions. And they're marked by these crosses on the profitability charts. So that first little trade on the stop loss approach would have generated $257, and the average down approach generated $415 because you averaged down at least once at that period there. Then you would have entered the second lot of trades that period there and they stopped it out at that point there. The stop loss approach generated about $376 and the average down $614. And for that trade there during that period on the weekly, on the daily here, you would have generated on the stop loss approach $457, and the average down generated $1,007. Now we max out to we average down 3 times. We don't go indefinite, so obviously going in the direction of the trend of the higher time frame. So as soon as it starts dropping and breaks into that moving average range, you don't add any more contracts on the trade. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.